I'm Edwin Warfield. I'm the publisher of City Biz. I'm honored today to interview John Petras, the managing principal for RockFarmer Properties. Welcome, John.
Thank you. We're really excited to be here and appreciate City Biz for having an interview.
Thank you. Can you provide an introduction to RockFarmer Properties, your focus, the types of developments and redevelopments, and your footprint?
Sure. RockFarmer Properties officially started in 2006. One partner, George Michelis, and myself. We're a New York City-based real estate investment, development, and management firm with a core focus on multifamily, office, retail. We will in development, residential development. We've done a lot of redevelopment is what our primary focus has been the last 6-7 years in New York City, at least. Right now, we have about 1,200 residential units in the city, about 800 residential units in Texas, and about 350,000 square feet of commercial, mostly in the New York market. And we also have a property management division that manages all our properties in New York, construction supervisory division that also manages a lot of our major construction jobs.
And can you highlight some recent acquisitions and divestitures?
Been very active very recently in the last, pretty much in the last 90 days or so. We just purchased a 440 unit portfolio in Dallas. We just expanded our platform to Texas after a long process of identifying new markets that we're super excited about. So that deal closed about 90 days ago. 440 unit off-market property. 60 days ago, we closed on another multifamily asset in Austin, which was our first foray into the Austin market. That was about 168 unit property. And we're about to close on 2 more multifamily properties, one in Dallas, one in Austin, in the next 90 days. So that's probably about 1,200 units in a very short time there. We've also been repositioning our portfolio in New York City. We sold a few assets that we've had for a long time, kind of legacy assets in our portfolio that we've, one was a condo, a rental building we converted to condominiums during the financial crisis. We just sold that just very recently. And we sold another large position in Astoria, Queens, that we repurposed that money. Again, 2 legacy assets. That gives you a flavor of what we've been buying, what we've been selling.
So RockFarmer Properties is also focused on modernizing pre-war properties. What are some of your redevelopment projects?
Yeah, that's really where our passion is. And when we like looking at residential buildings, especially in New York City, there's a tremendous stock of pre-war residential buildings, and not just residential, but we started out that way. And what really excites us is a building that it doesn't matter if it's 4 units or 300 units that has a lot of grandeur in it, but it's kind of diminished or it's been mismanaged or neglected over many, many years. And there's a lot of properties like that in New York City. And we love to find those properties in really strong markets and go in and do what we're really good at and envisioning what that property could be again with a little bit of a modern twist to it and a modern flair of what buyers and residents are looking for today. So whether it's a rental conversion or it's a co-op or condos, which we've done a lot of, we like to go in and find one of the best properties in a certain micro location that has some scale to it, and then take that property to a whole other level and make it the best in-class property by far in that specific micro market. And the Astoria Lights, which is one of the properties we just recently sold, is one of those where we came in and we're able to get new construction condo prices for a pre-war co-op in Queens, and we really love that. We're passionate about restoring buildings back to their original state with a modern flair, rebranding them, and really pushing the market. And in Astoria Lights, it was pushing the market 30% above where most brokers and what most market players thought the market could absorb, and sort of a little bit of a build it and they shall come if you build it right and position it right.
And you also have some office buildings such as Heritage Tower. Can you tell us about your office buildings?
Sure. That's been a special project. Similar situation, but in an office. We purchased Heritage Towers, about 130,000 square feet of retail on the ground floor, 2 levels of parking, and the rest is the office tower. And it was built in the 90s by an Italian couple that came over from Italy and did an amazing job building it, and it was their pride and joy. Over the years, the building became a little bit neglected and had a lot of deferred maintenance. The tallest building in that whole area of Jackson Heights, on one of the best corners in Queens, 82nd Street and 37th Avenue. It's a whole block, and I've been driving past that building for 20 years, and I always said one day if that thing sells, we got to be the buyers of that. And it was an off-market situation that we were able to build a relationship with the family, and we had we're fortunate to be able to purchase it. And we felt that, just like we do on our residential projects, that asset, with the right repositioning and rebranding and investments, can be the best in class office building in that market. And Jackson Heights is not really known for its office properties. It's a nice, really wonderful, diverse, and full of character neighborhood, but not a lot of office product. And having the largest office there with tremendous on-site parking and the ability to reposition it, we felt that if we do it right, we can achieve Manhattan-type rents for people that wanted to be in that market, that needed to be in that market and wanted to be in that market, not be in Manhattan for different reasons, or needed a second office in Queens. And we felt strongly there's a segment out there that are willing to pay top dollar and get great value and have the best in class building with parking in a great location. And we got a little bit delayed on our business plan because of the recent challenges with COVID, but that's fine. Still love the asset, and with some great tenants that are just moving in, and still have a little bit more leasing to do, but we're getting there. And that property is something we probably will own for a long time and be very proud of as we finish that project.
I see you've been exploring transactions outside the New York City metro area to the Sunbelt states. Can you tell us more about where you're headed?
I'll try to give you the short version of how that came about. George and I, my partner, every year when we talk about strategy and what we want to do differently, we've been primarily a New York metropolitan focused shop, and every year that conversation comes up, and every year we shoot down the possibility of going outside of New York, until about 3 years ago. And we felt that not just our personal portfolio, our company portfolio, our money that we manage for our investors, those being 100% or 99% vested in New York, we felt that it was time to diversify geographically. So we went on about almost a 2-year process of identifying all the possible markets and sectors. And it was pretty broad initially. It was, let's open up the box. And the box was, no West Coast, it's too far. No heavy blue states, because we're highly invested in a heavy blue state and we wanted to kind of diversify. And we wanted to be a multifamily, which is what we're really good at, and take what we're good at in New York and extend that and build a platform. And we weren't looking to dabble. We wanted to go into a market and, systematically, programmatically, build a nice portfolio and take a big position. So we narrowed it down, ended up in basically the state of Texas and Florida, which are vast, and then further narrowed it down into Texas, specifically Dallas, Austin, San Antonio, which we're super excited of those markets. And I think by the end of the year, we'll have, in a very short time, probably about 1,500 units and maybe about $150 million of worth of property value that we'll have purchased by the end of the year. And we're looking forward to doing a lot more there. It's just the beginning, and building out our team, and our investors are very excited about it. We're excited about it. And our philosophy was, we're going to go into a new market and we're going to ask our investors to also follow us into that market, whether it's in our new investment fund or the direct platform that we're rolling out. We felt it would be important for us to put a lot of our own capital up there first. And that's what we did. A lot of the properties that I just mentioned that we bought there, we put a significant amount of our personal and family money ahead of everyone. And just to show our conviction in those markets and our commitment to those markets. And a lot of sponsors usually put, very little money in the deals. not us on these particular deals. And that speaks to how confident we are of the markets and our ability to execute what we're good at.
Tell me a little bit more about your transactions in Austin and Dallas.
Sure. The first properties we bought in Dallas a couple months ago was 440 units, 2 properties right across the street from each other. And we locked up that deal back in January. And it became really, it seems like the first deal of anything you do in this market is challenging. It seemed to be easy. But what happened in that specific situation is properties were somewhat neglected and mismanaged by prior ownership. I think there was some disputes there. I'm not really quite sure. We were able to secure those deals off market. And then the winter freeze hit in actually all throughout the state of Texas, which was devastating. And the property suffered a good amount of damage, and that delayed everything. So it was a complicated entry point into the Dallas market for us, but one that was well worth it. The property is going to be eventually rebranded. We have, I believe, a $4 million improvement program that's going to be in the process of being rolled out right now. We love the location. We love our basis in it, and 1980s construction, garden style, and we think we can add a lot of value to that property. In Austin, we purchased a 164 unit property, and we decided in Austin, when we first started looking into the Texas market, we decided that it would be really be interesting if we can find a partner to help build out that platform in that market. We partnered with Wildhorn Capital in the transaction, and it's a local operator. And we were looking for someone that kind of reminded us of us 10 years ago. And they have that local knowledge and experience that we're accumulating ourselves as well. And great guys to work with. And we're doing a second deal with them in Austin that's closing in the next few weeks. So, where it goes from here, and in that relationship, we hope it continues, and we're excited to grow it.
So RockFarmer Properties property management division is called Douglaston Realty Management Corp. How many properties are managed, and what types of buildings?
Sure. Yeah, Douglaston is our property management division, as you mentioned. Right now, we have, after selling some properties, I believe we have about 1,200 residential units, about 350,000 square feet of commercial, and mixed in the residential are some condos and co-ops that we've converted years ago. At some point a few years ago, we had close to 3,000 residential units in Manhattan. We've been diversifying more into commercial and development projects. With all the pending changes in the rent regulation space, we were fortunate to have transitioned out, for the most part, out of that space in New York. And so Douglaston Realty is our management firm, does a really good job of running all our properties. We also do third-party management through Douglaston, although we don't really chase that. We'll do it for relationships. But having our own management firm gives us an advantage where we control the situation, and if we have to allocate more resources to it, getting a property up and running and stabilized, which sometimes is challenging, we're able to do that at the expense of the management company, but the real money is really made on the investment side, not on the property management side. And so we feel having a vested interest in both is the right way to go in our properties in New York.
John, I've heard that RockFarmer is launching a new it's your fifth opportunity fund. Can you tell us more about that?
Yeah, sure. We're really excited about it. It's as you mentioned, it's our fifth fund. We started our first fund back in 2006 when we started, and we've had several funds in between. It's exciting because every 3 to 4 years we come up with a new fund and a new strategy. Back in 2009 and 12, which we launched our second and third fund, they were strictly purely distressed opportunistic plays, and those funds are in their wind down process now and have done tremendously well for our investors and our team. And 2015, 16, we started a Horizon Fund, which was a 13-year fund, which is very unusual in our world. And that was because of the vintage. We felt we were somewhere near the peak of the market in New York City. And we felt that if we're going to buy assets, we're going to buy high quality, irreplaceable assets that we will have the ability to hold long term, because they very well might be worth less in the first few years. And that's kind of played out the way we thought. And fast forward to 2021, we're launching RockFarmer Opportunity Fund 5, and which make this is different in so much as that approximately half the capital is going to be deployed into New York metropolitan area, New York City focused distressed and opportunistic plays. And that could be buying non-performing notes. It can be originating high yielding debt. It can be taking advantage of bankruptcy situations, partnership disputes, off-market transactions, properties that are, a lot of deferred maintenance. There's been, what happened in the rent regulation space 2 years ago in New York City, where the laws were changed. We still feel that hasn't really played out yet, where the lenders, because of COVID, it might have given relief to a lot of property owners that have that. And we feel that that's going to be a space where there's going to have a lot more distress coming up in the near future, even from the lending side. And so we hope we can take advantage of that as well. So it's a bit of a barbell strategy. Fund is going to target those type of investments in New York, and then completely different. We are going to target investments, and we have been in the Sunbelt markets. Right now, we're focused on Texas. I think Florida is probably next. The deals that I mentioned that we bought in Dallas and Austin are some seed investments in the fund. And we kind of like the ability to buy cash flowing value add multifamily in the Texas markets, and then mix it up with distressed opportunistic properties in New York, which has been our bread and butter, which are not really cash flowing situations, but those tend to be more short term in nature, where we can be in and out of a deal in 12 to 36 months, whereas in Texas and the multifamily side, it's more of a 3 to 7 year hold.
What are you excited about, and where do you see the real opportunities going forward?
There's a lot of things we're really excited about right now. There's also a lot of challenges, which we all know. What really excites us is we've been, our platform is built on, great investor base that we've developed over the years. A lot of them are good friends and family and business associates, and that's been building up, quietly over the years. And what we decided to do with this fifth fund, and at the same time while we're expanding into new markets, is open up our platform on a wider level. And what I mean by that is anyone any members that come into our investment fund, we're going to be offering in those situations, especially if it's a sizable deal, we'll be offering the ability to participate directly into deals as well. And we've done that over the years, where we'll syndicate it with a small group, but we'll be offering that to our investors in our investment funds. And we think there's a lot of demand for that. We've been getting asked if there's opportunities. And I think the other thing is we have a lot of relationships in and out of the industry. We've always done things kind of under the radar from the investment side. And I think it's time we're excited about opening that up and letting all our relationships know that they have an opportunity to invest with us in our platform, whether it's directly in a deal where they can kind of pick and choose whether they like a deal or not. And also in our fund vehicle, which gives them diversification and that barbell approach, balancing distress with multifamily and other markets. And that's exciting. And we have a lot of interest already. And raising capital has never really been a challenge for us, but we're excited to do it and get in front of a lot of new people. And that will be the case probably for the next 3 to 6 months.
John, I want to thank you for sharing your story and the RockFarmer property story. And it sounds like you're on the edge of doing some great things. So again, thank you for your time, and we look forward to sharing your story with our readers.
Thank you, Edwin. Appreciate it. Thank you.